Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. Markets flip-floppy, but yes, holding on to some bit of a flat session almost, we could say, for the markets at least.
Absolutely, a very good afternoon to you, Vinny. And when markets do nothing is actually good in a way, and that's exactly what the markets are doing right now. Absolutely nothing. We're trading flat with a positive bias when it comes to the Nifty, flat with a negative bias when it comes to Nifty Bank as well as Sensex. Talking about the earnings season, slew of earnings coming non-stop. A short while ago you had Karur Vysya, then you also had Yatra Online. The numbers are flashing on the bottom of the screen. So a lot of these numbers will react to earnings. And remember, you have the all-important HDFC Bank numbers. This is the first time that the merged entity will be actually reporting its numbers. So all eyes on HDFC Bank, and we might get that number anytime during the show. Let's take a deeper dive into the markets. Like I said, Nifty Bank is trading flat with a negative bias as the broader markets once again holding on to really good gains in trade today, be it mid-cap or a small-cap index, both of them seeing strong strength. Advanced decline ratio for now is in favor of the gainers. Talking about sectoral moves then, it is the pharma index that's taking a tad bit easy along with realty index in today's trading session. While on the flip side, the metal index is seeing very good strength, 1.1% uptick coming to the metal index. Also, PSU Bank Index holding on to gains of about 0.7%. So that's the way how the markets are looking like. And like I said, Vinny, when markets do nothing, it's absolutely perfect.
Absolutely perfect when markets do nothing. But yes, let's bring on board Nagaraj Shetti on the technical front today, who will be talking about technical stocks that are moving in trade. And from the research team, we have Ashesha as well as Harsh, who is joining us as well. But let me start with the first stock that is in focus today. We're going to talk about Avenue Supermart. The company reported its Q2 numbers, weak set of numbers that came in from the company over the weekend. Revenue, yes, that came in line, but profits, that was a miss on in Q2, as well as the margins that also saw a decline coming in. When you look at revenue, yes, an 18.5% uptick on a year-on-year basis. What led to the growth momentum is now we're seeing a bit of a recovery that is coming in the general merchandise and apparel business, but it's still below those pre-COVID levels, and that sales mix has changed, post-COVID, because that is not picking up as much as it should, and that is why the margins are also impacted. 50 basis point contraction in terms of the margins of the company that we saw. Other than that, in terms of the higher expenses, that's impacting the bottom line of the company as well. So adverse sales mix impacting the margins, higher other expenses is impacting the bottom line of the company. Overall, a weak set of numbers that was reported by Avenue Supermart. That is why the stock is down and out of trade, trading with cuts of almost 2.5% as of now, Cheryl.
Alright, that's Avenue Supermart subdued in today's trading session on back of its earnings. But let's talk about a counter that is buzzing in trade, and that is Kalpataru Projects. And on back of actually good order wins, if you look at the stock, it hit or rather surpassed the 5% level at one point in time. Also, it hit a 1-month high level as well. The company said that its international subsidiaries have secured new orders worth about 2,217 crore rupees. The order breakup was the orders worth about 1,993 crore rupees were secured under its power transmission and distribution business in India and overseas markets, while the company said that 224 crore rupees worth of orders was bagged under its building and factories segment. Talking about the auto inflows in April to March period, they were around about 10,616 crore rupees. This is for the year 2023-24. So far, the auto inflow is around 10,616 crore rupees. As you can see, as we're talking as well, the stock is soaring in trade. 5% uptick on back of new order wins as much as 2,217 crore rupees.
Okay, another stock that is soaring in trade today, that is Deepak Fertilizers, Nagaraj, and that's a stock that you've picked out for us today. So in terms of charts, what is the indication now you're picking up? Seems like a bit of pace that the stock has picked up in the last 6 months. What is the view now?
Hi, good afternoon. Deepak Fertilizers has been in a range-bound action over the last few months, and we have seen the stock is making an attempt of upside breakout of around 600 odd range in the past. Recently, it has shifted into a sideways consolidation movement again in the last couple of months, and currently making an attempt to break above the 685, 690 levels, currently trading around 685. Overall chart pattern is looking positive. The stock has broken above the resistance of weekly 10 and 20-day 20-period EMA on the weekly chart, and overall chart pattern is looking positive. Volume is also rising during the upside breakout in the stock price. I'm expecting this stock to reach up to the next overhead resistance of around 750 levels in the near term.
All right, so that's the view coming on Deepak Fertilizers, but let's shift focus and let's talk about Federal Bank, because a short while ago you had Federal Bank also that reported its Q2 numbers, and to talk more on the earnings and the way forward for the company, we have Mr. Venkateshwaran, who is the Group President and CFO at Federal Bank. A very good afternoon to you, sir. Thank you so much for joining us on ET Now. And let's further dive into your numbers. If you look at your NIMs for the quarter gone by, if you look at the NIMs number, it is coming much below what the street was anticipating. If you could tell us what exactly is putting pressure on NIMs and what's the way forward coming in for your net interest margin going ahead?
Okay, good afternoon, and good afternoon to all the viewers. At a broad level, I would say that it's a very strong quarter in terms of performance. We had the highest ever operating profit, net profit, and NII. And also what is important to note is that the ROA has come in at a very healthy 1.36. Now, just focusing on one particular aspect, NIMs may not give the full perspective. I will address your question in a minute, but what we should look at is the contribution of all the lines in making sure that we deliver a very healthy ROA, whether it's credit cost, which is at its quite low. I don't expect it to remain at these levels going forward. And fee income has grown at a fantastic rate, even quarter on quarter and year on year, without any one-offs. And the credit growth has been broad-based. So if you look at from an overall perspective, I would say that it's a quarter of a fantastic performance, especially given the market in terms of where the deposit rates are. That's where I'll address your question on NIMs. Now, probably the market was expecting a particular number on NIMs, and we have, of course, delivered a NIMs which is higher than Q1. But what is important to note is if you see, we have grown our deposits at 23% year on year, vis-a-vis advances, which is around 20%. It was a deliberate strategy to bulk up on deposits, grow it, to make sure that we have enough funding to meet the growth opportunities. If we had not taken that incremental deposits of, let's say, about 3,000 odd crore, my impact on NIM would have been higher by another 4 bps. So I would have easily crossed 320. But we felt that it's prudent to make sure we have enough deposits to support the growth, which we continue to foresee in the 18 to 20%. So that's the explanation for the NIM movement, though it may appear to be lesser than what Street expected. But conscious choice of adding deposits at a particular rate, and deposit costs are going up, and there is still a huge scramble for deposits, and in our view, that will continue for some more time.
So this is Vinny joining in the conversation as well. I just want to ask one more thing in terms of NIMs. Then what is the guidance that you would have for Q3 from here going forward, as well as for the second half of the year? What would be the NIMs that you are keeping an internal target for?
Yeah, I think the way we are looking at it currently for Q3, my expectation is we don't want to be lower than where we are currently. And that itself is going to be challenging us, given the way the deposit pricing is in the market. So our objective is to improve from where we are, but at the minimum, make sure we are not going to be lower than where we are currently on the NIMS trajectory. And for the full year, again, it's a combination of several factors, mostly driven by external, in terms of inflation, global uncertainty, crude oil prices. So at this stage, giving a view on Q4, in my view, things are changing so rapidly. This becomes quite difficult to predict, what it will be in Q4. But having said that, we had earlier guided that H2 will be better than H1, and our endeavor will be to make sure we are delivering on that.
Right. So let's talk about your slippages, because in the quarter gone by, you had a slippage of approximately 350 crore rupees. No doubt on a quarter-on-quarter basis, we've seen a substantial decrease in your slippages number. But if you could shed some more light on what actually contributed to the slippages in this quarter, and also if you could tell us about your future anticipation as well. Do you see the run rate of slippages in the similar area of around 350 odd crore rupees, or do you see further decline going ahead?
I think the slippages came in at at the level which we were working towards. And what is important is the recoveries as well, which we had in this quarter. So the net slippage, if you see quarter on quarter, is just hardly anything, just 1 crore if I'm not mistaken. So we have made sure that the recoveries which we had planned for, and there wasn't any bulk recovery which is there in these numbers. These are all small amounts, and the effort put in by the teams on the field to make sure we get the monies collected. So going forward, our view is, of course, to try and work towards a similar slippages number, but that again depends on several parameters. We should also understand that corporate, the NPAs have been virtually zero in the last 5-6 quarters. It's too good to be true. At some stage, you'll start seeing that coming in some way. I'm not saying anything specifically for us, but this is more from an industry perspective. And what we do believe is, that's why I said the credit cost at the last quarter level of 13 bps is too good to be true. It will normalize at some stage.
And sir, what about, you were talking about your loan growth, your deposits, surely that has been quite good this time. So could you talk to us about the sustainability of that going forward? How do you see it shaping up in the next second half of the year?
Yeah, in terms of credit growth, we continue to guide towards the 18 to 20% growth, which we had indicated earlier as well. There is good visibility on that aspect, and given our risk appetite, we are not a bank which will go, we're a moderate risk-taking bank, and we wouldn't go aggressively into products where the margins are very high initially, but then it blows up 12 to 18 months down the line. So it's a very calibrated move in terms of choosing which segments we will grow, and 18 to 20% growth is reasonable to expect, subject to any black swan events. And having said that, like I said in the beginning, it's broad-based. The relatively high-yielding percentage of the book continues to grow much faster. Products like CVC, gold did quite well, 8% quarter on quarter. And credit cards, PL, these are all small bases, so they grow at 15-20% a quarter. That will continue to grow as well. That's on the credit growth outlook.
Right. Let me ask you a question which actually the entire street is waiting for, about the FedFina IPO. By when do you expect to launch the IPO? Do you think it will happen next quarter, the quarter that we are in currently, that's Q3, Q4, or do you see it actually getting further delayed?
Yeah, at this stage, all I can tell you is that the engagement with the regulators is going on. Questions are being answered. The RHP has been filed, and pretty sure that it's at an advanced stage. So I'm pretty sure the board of FedFina will take a call on when to launch it.
Okay, sir. Thank you so much for joining in with us this afternoon on ET Now, giving us an understanding on when we should be expecting the growth, the FedFina IPO as well coming up. But yes, thank you so much, Mr. Venkatraman, for joining in with us this afternoon. That was the management of Federal Bank for you all. Inline set of numbers is what we could say overall on a totality basis, so keeping an eye out on that one. But let's move on and keeping it going with more stocks that are in focus today. And on the technicals, Nagaraj, you've picked up Welspun India for us. What are the charts now indicating for Welspun? Where do you see it headed from here on? What is your target?
Yeah, Welspun is chart pattern is indicating very positive bias for the rest of the long term. And recently, if you can see the chart, what it is suggesting that over the last past couple of months, in fact 5 to 6 weeks, this stock was not doing anything in terms of the prices, and recently it has witnessed upside bounces from the lower levels. And if you look at the last 4 or 5 months, the stock has been continuously taking support of 10-week EMA, which is significant, and higher tops, higher bottoms is also on the cards. The recent upside breakout is significant in terms of a trend. I am expecting this uptrend to continue for some more period, and the next overhead resistance to be watched for this stock around 150 in the near term.
All right, moving on. Actually, let me mark the numbers of Bank of Maharashtra actually, because you had the numbers that come in, a good set of numbers coming for Bank of Maharashtra. If you look at the profit, it's coming at around 920 crore rupees, which is an uptick by as much as 72% on a year-on-year basis. If you look at the net interest income has seen a 29% uptick coming at around 2,432 crore rupees. If you look at the asset quality, then it has better on a quarter-on-quarter basis. So if you look at the gross NPA, it came in at around 2.19% versus 2.28% on a quarter-on-quarter basis. While if you look at the net NPA, it stood at around 0.23% versus 0.24% on a quarter-on-quarter basis. So those are the numbers coming in for Bank of Maharashtra for you. Good set of numbers coming in. The street also is giving it a thumbs up. 1.9% uptick coming for Bank of Maharashtra, as you can see it on your screen right now.
Absolutely. Let's move on to the next one, and that is Gati. This stock also is in focus today, Ashesha. Why is that so? What's the news for you?
Well, yes, the stock is in focus on the back of strong operational data for the month gone by, and as you can see, the stock is holding up with gains of over 12% as we speak. So volumes including Surface and Air Express came in at 109 KT for the month gone by, that is for the month of September, which on a month-on-month basis is a slight decline of about 3%, but has shown growth of about 8% on a year-on-year basis. And for the full quarter, second quarter FY24, volumes have come in at 333 KT, up 18% on a year-on-year basis, and this is on account of strong pre-festive ordering. The company also said that the growth momentum continued despite high base in the same month last year, in the month of September 2022, and they expect the momentum to continue in the current month, October 2023 as well. So yes, strong set of operational data that the company has reported for the month gone by. The stock is holding up nearly 12% higher in trade as we speak.
All right, moving on. Nagaraj, NMDC, how is this one looking to you on the charts? Do you think that this is a metal bet that you can take despite the volatility that you will see in the commodity market?
Yeah, this has been outperforming since last many months, since October, September onwards. This stock has a phenomenal upside rally. Interesting pattern is unfolding recently, the bullish flag pattern we say technically, and around 150 levels, and last week it has witnessed a decisive upside breakout of the bullish flag pattern. As per the pattern, the potential upside probability comes around 180 for the stock, and overall chart pattern is looking positive. I'm looking forward in stock to reach towards the next probable upside resistance of 180 in the near term.
Okay, keeping an eye out on those levels for NMDC. Let's move on, talk about IndusInd Bank then, Harsh. And why is this one in focus today? What's the news flow here?
Well, yes, IndusInd Bank in focus on the back of the rebalancing which is expected to be announced on November the 15th. If that happens, flows are expected to come through from the 30th of November 2023. Reports indicate IndusInd Bank has a high probability of getting included. You have the likes of an MK based on mutual fund data which suggests that in Q2, DIIs have actually increased their holding by more than 1%, but FIs have actually reduced their holding by around 1.5% from that 42.3% mark. FI holding has come off to 40.8% since June of 2023. Now, of course, this could lead to a further headroom increase, or rather a foreign headroom to increase to 15.9% versus the 13.9% number earlier. Of course, if included, this will add to the flows for IndusInd Bank, around $250 to $300 million of flows expected.
All right, moving on then, let's talk about MMTC. Nagaraj, no doubt this particular counter has been in focus on back of all government moves have been. A lot of these mining construction companies have been soaring, MMTC no less. In the last, you can see this on the screen also over the last 2 weeks, the sharp spike that the stock has registered. But do you think now it will consolidate after giving almost over 100% returns in the last 6 months?
I think overall chart pattern is indicating that I'm not expecting any consolidation right now or any downward correction, possibility of a downward correction. The pattern is indicating some more upside for the stock. After witnessing an upside, this is an upside breakout of the rounding type bottom around 40-42 levels. This stock has almost doubled in the last few months. And overall chart pattern is still looking positive. The volume pattern as well as the momentum indicators are suggesting that more upside for the stocks. I wouldn't be surprised if stocks reaches to the next 3-digit levels, which is the next set of resistance of 100 in the next 1 or 2 months.
Okay, keep an eye out on MMTC. Let's move on and talk about Texmaco Rail. Why is this one in focus? On the back of a strong set of numbers that the company reported in Q2, the stock actually has seen a sharp run-up coming in as well. In the last couple of days, we've seen a strong move coming in for the stock. The revenue saw an uptick of 66%. The profits of the company were up by 67% as well. And other than that, when you look at it in terms of overall the margins of the company, that has too seen an improvement. 9.6% is what the EBITDA margins came in at. EBITDA also saw a strong performance and an uptick of 79%. So operating performance has been good. Strong growth in the bottom line as well as the top line of the company, keeping the stock abuzz, and today seeing gains of as much as 3.5%.
All right, Nagaraj, looks like you are at least in love with the PSU space. I'm not sure if even PSU banks make that cut, because after you spoke about NMDC, you spoke about MMTC, now you're going to talk about IRFC. And how are the charts for this one looking? Because yes, just like the rest of the PSU other names, IRFC has also had a spectacular run.
Of course, these PSUs are in a limelight over the last few periods. And if you look at, since now we have discussed about the upside breakout, the candidates, now this is the one I'm anticipating the upside breakout for the stocks. If you look at the chart for the stocks, has been a phenomenal upside momentum from the 35, 38 to almost 75 multifold returns in the span of a few months, and currently moving into a consolidation pattern. What is clearly indicating on the chart is a lesser number of weakness, lesser number of downward correction, and a more number of upside, more upside and a lesser downside for probability for the stocks. Currently moving a range bound action, the overall chart pattern is indicating a bullish flag type pattern. But since this pattern has been formed, there is no indication. Since now there is no indication of any this upside breakout right now. Showing consolidation at the highs, 80 is the breakout point. I'm expecting very soon this stock is likely to move above the upside breakout of this pattern, bullish flag pattern around 79.80 levels. Once it breaks above the 79.80 levels, the next target would be, next upside resistance would be, I mean to say, around 92. This stocks could zoom into a 92, 93 levels in the quick period of time.
Moving on, let's talk about Anthony Waste. Then that particular counter is in focus in today's trading session. Sharp uptick of as much as 6%. Last time I checked this particular counter, now it's trading with gains of about 5.2%. Nevertheless, holding on to strong gains. And why is that? Because they've come out with their Q2 operational performance in which they've registered good growth. So they've said their total tonnage handle in Q2 was higher by about 9% on a year-on-year basis, coming in at approximately 1.15 million metric ton. While they're saying that the total core operating revenue saw an uptick of as much as 20% on a year-on-year basis. Remember, this is just their Q2 operational performance. What they're saying is that they're making significant progress on FY24 priorities with focus on boosting core revenue generation as well as optimizing cost structure. So positive commentary coming in from the management, plus their Q2 operational performance also was really good. So you can see the stock is trading high of about 5.2% as we speak.
Okay, let's move on, and on that note, we're actually going to sip into a very short break. Viewers, don't go anywhere. We'll be back with more stocks after this break.